Hey guys, what's going on? Jab here, and in today's video, we're going to be doing a little bit more longer-term technical analysis on Bitcoin because in today's video, I want to explain exactly why everybody seems to be talking about a Bitcoin bull market on the horizon. A lot of people, including myself, you've heard people like Thomas Lee, perhaps you've heard me, perhaps you've heard other YouTubers talk about how a Bitcoin bull market will be starting in the year of 2019. And if you have been wondering at all about why all of us are expecting that a Bitcoin bull market is coming and why we seem to be so certain of it, this is the video for you, because in today's video, I want to lay out several different technical indicators and several different technical confirmations that a Bitcoin bull market is coming. We're going to be doing a lot more longer-term TA on the daily chart and the weekly chart today, and we're going to be going over many different technical indicators that are useful for predicting and calling and confirming Bitcoin bull markets in today's video, guys. So that's basically what we're going to be discussing. Also, before we get into it, I do want to mention that a new video has gone live in CT2A. This video is on market sentiment. I will discuss that a little bit more later on in the video. Remember, there is a 20% off sale going on with the coupon code Easter2019. If you guys have been looking to learn how to do technical analysis, links in the description. Anyway, guys, without much further ado, let's go ahead and get right into it. I do want to mention before we get into it, actually, that I am very sick. My voice does hurt, but we're going to get through this video. If I stumble over my words, I do apologize. Anyway, the first thing that I want to discuss here is I want to compare the 2018 bear market and subsequent 2019 accumulation phase to the previous bear market and accumulation phase cycle before the bull market started. It's pretty easy to go ahead and define what the market was back over here in history. In hindsight, it's much easier to do that. We can define pretty easily, and I think we can all agree on what constituted the bear market over here in 2019. It was this time period right here where Bitcoin was above support at around $300. All of this time period in here, this was the bear market. Following that, Bitcoin broke out and went into a bull market after it was in the accumulation phase in this time period here. And then the accumulation phase lasted for a little while, and then the bull market started. If we were to go ahead and measure the length of this, I want to do some time analysis, if you will, actually, on these markets. If we look at these markets, this bear market right over here lasted almost exactly 400 days. Do you see that? It lasted almost exactly 400 daily candlesticks, which is obviously 400 days. And then after that, the accumulation phase down here from right around January the 1st, at the very beginning of 2015, excuse me, all the way to about halfway through October, was about 280 to 290 bars. So what we're looking at here is that the accumulation phase was around 70% the length of the bear market. Not exactly. We're going to use a number something like that. 400 days to about 280 or so. If we look at the length of the bear market here in Bitcoin, starting up here in 2017, at the very end of it when Bitcoin ran to $20,000, and then right over here to where we dumped below $6,000 using the same measuring points as we did in 2014 and 15, we'll see that this previous bear market was only about 330 days. So if the accumulation phase was to be about the same ratio of length to the bear market, then we would expect that the bear market would be obviously longer and the accumulation phase would probably be somewhere under 220 days or so in length. And if we go ahead and measure this accumulation phase so far, we're already about 160 days through it. So if we were to use that same rationale and expect the accumulation phase to be the same length as it was in the past, that would expect that we would be entering a bull market sometime in June, July, August, September, sometime over there, depending on what the technicals say. Now, that's pretty interesting, but that is only one piece of technical analysis. Of course, there's a lot more that we have to discuss. That's not the only reason that we're predicting a Bitcoin bull market is starting. But the next thing I want to do is I want to show you the beginning of the last Bitcoin bull market. Right over here in October of 2015, this time period in here, all of that, that's basically where Bitcoin started the bull market. You can pick just about any one of these days and say that's the day that the Bitcoin bull market started. Typically, I use some moving averages that we'll be discussing later and say it started right here around the 15th of October. Like I said, we'll get to that in a second. But it's very important for us to understand what the beginning of a Bitcoin bull market looks like, both on the chart itself and in relation to different technical indicators. And we can see that Bitcoin went absolutely parabolic. It went absolutely ridiculous. And if we were to see the same thing happen to Bitcoin nowadays, we might see something similar happen if, for example, Bitcoin rallied here, fell over and crashed, and then we have something like a Bitcoin ETF get accepted, or BACT gets launched, or maybe some country adopts Bitcoin as their official cryptocurrency, as their official currency. That last one's a little bit more far out, but you guys understand what I mean. Perhaps we could see some kind of technical and fundamental alignment of bullishness drive Bitcoin really, really bullish and break $6,000. $6,000 is a very important level that we'll be discussing a little bit later, so make sure you stick around for that. But the next thing I want to discuss actually has to do with what we talked about in yesterday's video. If you guys haven't seen it, go back to yesterday's video. I talked about exactly what golden crosses and death crosses are. and why they're so important to our technical analysis. As you can see, a golden cross and a golden cross is about to happen. Actually, we see that the 50 moving average is crossing up here above the 200 moving average very, very soon. But as I mentioned in that video as well, last bull market that started, we saw 2 golden crosses. We saw one, and then we saw a second one. We saw the prequel, and then we saw the golden cross itself. So guys, what we're seeing right now is that Bitcoin is about to have a golden cross. On the short term, as I talked about in yesterday's video, you could actually trade that contrarianly, I made that word up, contrarianly, you could counter trade that and see that Bitcoin will probably fall over based on the history of golden crosses. If we look back on golden and death crosses, I'll be brief because like I said, I did mention this in yesterday's video. Normally when you see a golden cross, it's actually bearish on the short term, but in the long term, it's a very good thing. But right now, what we're seeing is a golden cross. And that's a very bullish thing because that does mean that there is most likely, almost certainly, in fact, a Bitcoin bull market coming within the next 6 months. This alone is strong enough to predict a Bitcoin bull market. That's how important golden crosses are. They happen very infrequently, but when they happen, especially when they look like they do, I'm not talking about a golden cross like this. This is technically a golden cross. It's not a very good example of one. But when they look as healthy as they do in today's market, they typically are indicating that there is going to be a bullish breakout of some kind. We saw if there was a golden cross over here as well, back over here in February of 2012, and from there a Bitcoin bull market did start that lasted the duration of 2012 and through much of 2013, all the way up here to the end of 2013 into December. So golden crosses are very powerful indicators for predicting Bitcoin bull markets, but just because we're about to see a golden cross does not mean that we're seeing a bull market start tomorrow or just a couple days after this golden cross happens. What we're going to see is that this is going to cross, and then maybe we'll start a bull market, but there's also a pretty good chance that we fall over. These 2 moving averages do something like this, where we see the death cross and then they cross again. We see a death cross, which is the inverse cross, and then we see a bullish cross, and then that will be the start of the bull market sometime this summer. Guys, I'm very much expecting that the Bitcoin bull market is coming this summer. This is but one of the many reasons why I believe that. The next thing that I want to discuss actually has to do with just one of these moving averages. It would have to do with the 200 moving average out on the weekly chart. If we come out to the weekly chart, what we're going to see is that this moving average has never been above Bitcoin. Bitcoin has come down and tested the 200 weekly moving average time and time again, especially during accumulation phases after the majority of the bearishness from the bear market is exhausted and Bitcoin has broken key levels of support. We'll be discussing that a little bit more in the future as well in a couple of minutes. But we've never really seen Bitcoin break this support. If we had have seen Bitcoin do that this year, that would have indicated that a Bitcoin bear market was probably going to continue and that the bull market was further away than we thought. But with all of that being said, Bitcoin has come down here and tested the 200 weekly moving average just as we would have expected it to because it did so in the last accumulation phase. And from here, Bitcoin has a jumping off point. Bitcoin does not want to go back below this moving average. It's very unhealthy if Bitcoin does. It in fact might be catastrophic, you would say, if Bitcoin goes below this. This could be very bad. This could prolong the Bitcoin bear market by maybe up to a year. With all that said, it's very unlikely that Bitcoin is going to do that. And based on how Bitcoin has reacted around this moving average so far, it's actually a bullish thing. The fact that Bitcoin came down here and this is where it bounced, that is actually a very bullish thing and does indicate that we are in an accumulation phase. And as you guys can see, based on the previous accumulation phase, when you're in accumulation phase, what's the next phase? A bull market phase, a bull cycle. You have a bear cycle, a neutral cycle, and a bull cycle. And then you have a bear cycle, neutral cycle, bull cycle. That's what we've seen. We saw the bull cycle ending over here, the bear cycle. Now we're seeing some more neutral price action, and we'll see the bull market come soon. The next moving average that I want to discuss, and many of these are moving averages because moving averages are typically going to be more powerful on longer term time frames, especially for predicting long-term price action, is the 20 weekly moving average. Guys, in the Cryptocurrency Technical Analysis Academy, if you're in the academy, many of you are, if you scroll down to the very end of the course curriculum, you will find that there's a video dedicated to the 20 exponential moving average. There's a 10-minute video talking specifically about just this interval exponential moving average on many different time frames. And that's because this is a very powerful technical indicator on just about every single time frame. The weekly chart, daily chart, monthly chart, all these charts, including the shorter term time frames, hour chart, 4-hourly chart. This is a very powerful technical indicator. As you can see, Bitcoin has not been above this technical indicator, above this moving average very much in the last year and a half or so. We saw Bitcoin get above it 3 times here in 2018, but never was Bitcoin able to stay above that level and actually kind of put into motion an actual Bitcoin bull market. Recently, though, Bitcoin has gotten above the 20 weekly moving average and has gotten above it in a very big way. And if you guys have watched this video in the Cryptocurrency Technical Analysis Academy, And if you've watched my videos in the past, you will know that on the daily chart, I normally use the 20 exponential moving average to define when a Bitcoin rally is in motion. As you can see over the last several weeks, Bitcoin has been in a state of bullishness, and it's been defined by the fact that it's been above this 20 daily exponential moving average. The same thing is true on the weekly chart, except when we're looking at the weekly chart, we're not talking about daily rallies. We're not talking about daily pullbacks. We're not talking about this kind of movement. We're not talking about these kind of rallies. We're talking about this kind of movement where Bitcoin goes into a bull market and a bear market. So when you're above the 20 weekly exponential moving average, the WEMA, typically you're in a bull market. On the daily chart, typically you're in a rally. In the weekly chart, typically you're in a bull market. As you can see, though, Bitcoin did get above this moving average a couple times back over here in the last bull market. And we did, in fact, break above it and then break back below it, then break back up above it, and then start the bull market. All the more reason to believe that Bitcoin is here right now and not here. Bitcoin is right there and not right over there. I'm not exactly sure what my chart is doing, so we're going to leave it to its own devices for a minute. But as we can see, Bitcoin is above the 20 weekly exponential moving average. Based on what Bitcoin did in 2015, we would expect Bitcoin to come down here and break this moving average. Then in a couple of weeks, in a couple of months, come up and re-break it to the upside. And then from there, in correlation with everything else we've discussed, start a Bitcoin bull market. That's exactly what we saw in the past. We've seen that happen several times, not just on Bitcoin markets. I believe we saw a very similar thing happen over here. When Bitcoin was above the 20 weekly exponential moving average, it was in a state of bullishness. Very similar thing back here indeed. Oh, excuse me for a second, guys. I apologize. Anyway, let's go ahead and continue. The next thing that I want to discuss before we wrap the video up, actually, there's two things I want to discuss. Forgive me for my sickly brain. I can't think of all the things we need to do. Either way, the last thing that I want to discuss, one of the last things that I want to discuss, I can speak English. One of the last things that I want to discuss here would actually have to do with $6,000. You guys probably know at this point, I'm sure you do, that $6,000 is one of, if not the most important levels of support and resistance in all of Bitcoin technical analysis, pretty much for all time. I mean, it's been such an incredibly important level of support here in 2018. It was a great foundation for our technical analysis, and it really did provide a baseline for Bitcoin where we could start our building our technical analysis from. It's going to be a very important level of resistance. When Bitcoin inevitably gets back up above $6,000, this is going to be one of the confirmations I'll use to define a Bitcoin bull market starting. But that's not actually why I brought this up. I want to mention the $6,000 level right here in correlation to the last Bitcoin bear market. As you guys have seen in my video and so many other videos by me if you watch the channel a lot, and by other YouTubers I know, if you've been watching, there are a lot of similarities between 2014-15's bear market accumulation phase cycle and 2018-19's bear market accumulation phase cycle. And one of those similarities has to do with the level of $300 and $6,000. This level of $300 right here is analogous to Bitcoin's $6,000. As you can see, Bitcoin defined this as a level of support. You can even draw this back a little bit. When Bitcoin came very close to $300. I'm thinking about today's prices when I say $3,000. $300 came down here, defined this as a level of resistance and support, and when Bitcoin did get back up above it, that was the beginning of a bull market, and we even came down to test this level before blasting off once more. Now, what I want to bring up here is the levels of retracement from all-time high and from $300. Bitcoin retraced 75% all the way down here to this level of around $300. It actually is a bit lower, right around there. I didn't draw that level at exactly the right place. It needs to be right down there. It's 75% retracement from $1,200 or so all the way down here to $300. From there, Bitcoin retraced, you may have guessed, about 50%, 45 to 50%, depending on how you draw the bottom. We'll call it 45%. So 75% and 45%. Let's look back over here on 2018 and 19. Remember, $6,000 and $300, they're basically the exact same level in the analogy that we're drawing between these two markets. Bitcoin retraced, you guessed it, 70% from all-time high. Not 75%, but that's pretty close. That's good enough for government work, even though Bitcoin has nothing to do with the government. And then after that, Bitcoin retraced right around 45%. So guys, Bitcoin has followed the 2014-15 bear market accumulation phase cycle tit for tat. It's been almost exactly identical to what happened over here in 2014-15. Almost the exact same thing has happened in 2018 and 2019. I've shown you so many technical indicators. There are many more that I haven't discussed in this video, that I've discussed in other videos, but I want to wrap the video up with one more. There are, like I said, many more that I could discuss, but the last one that I want to discuss here would have to do with the weekly RSI. If we look at the weekly RSI here, and you have chart vision like I do, and you can look at this and just say, okay, well, there's a pattern here. Let me think about what it is. I found it. If you can do that, then you're going to see something very striking here on this RSI figure. I'll go ahead and draw it for you. This level right here. This level right here. We draw it up a little bit. That level right there. That is a very important that's a very important thing to look at here on the weekly RSI. This level of support and resistance. As you can see, during the 2016-17 Bitcoin bull market, Bitcoin never once went below 50 on the RSI out on the weekly chart. Never did it. Not once. It never did it. Bitcoin was very bullish considering we were in a bull market, and we never went back below it. But an interesting thing happened over here in 2015 during the accumulation phase. Bitcoin had just gotten above this 50 level right over here in the preemptive rally before the bull market, which started over here. As we can see, Bitcoin got above it and then very quickly fell back below it. And then when we got back up above it, again, we ran up to 70 and a bull market started. I think a very similar thing's about to happen to Bitcoin because as we can see, for the first time since the Bitcoin bull market ended, Bitcoin is above this level on the RSI. Check this out. Bitcoin is sitting above the 50 level right now. But at the same time, if we look at our short-term indicators, it seems that Bitcoin is due for some kind of big correction. I'm not saying tomorrow, so I'm talking about on the longer-term time frames. I mean, in the next week or two, Bitcoin is probably going to have some kind of big correction. Maybe even 3 weeks from now, it's going to have some kind of big correction, which would most likely drive Bitcoin's RSI below the 50 level. And then if a Bitcoin bull market starts based on all our other technical indicators, well, Bitcoin is going to get back up above that 50 level in exactly the same fashion as it did over here in 2015. Guys, like I said, that is just one of a plethora of technical indicators that I can get into. I could literally make this video 45 minutes, an hour long. I can make it 2 hours long. There's so many technical indicators that we can discuss here. But guys, as you may or may not be able to hear in my voice is a little bit hoarse, and I don't know exactly what's wrong with me, but I'll figure it out. Anyway, guys, that is basically what I wanted to discuss in today's video. I wanted to explain to you guys exactly why everyone is talking about a Bitcoin bull market starting. Like I said, there's so many other technical indicators that I could have discussed that I do recommend you go and research into. Don't just watch this video and say, okay, well, the Bitcoin bull market is starting because Jeb said so. Go and do your own research. Go and do your own technical analysis. Go look at what other analysts are saying. Go and research Bitcoin bulls. Go see what Thomas Lee is saying, for example. Go see what these people are saying and why they're saying it. Do your own research. Use your own brain. You guys are really, really smart. I know you are. If you weren't, if you're in Bitcoin, so you must be a genius. That's basically the way I look at it. Anyway, guys, that's basically going to do it for the technical analysis portion of today's video. But I do also want to mention before the video wraps up that the new video in the Cryptocurrency Technical Analysis Academy has gone live. That video is market sentiment every single weekday. Starting today on through Friday, there will be a new video going up in the Cryptocurrency Technical Analysis Academy. By the time we are through, there will be 35 videos in CT2A and nearly 10 hours of content. You can see the duration of all these videos right here. Add all those together, and we have nearly 10 hours of content lined up for you guys. Very, very good course that everybody seems to be enjoying. Like I said, we've had hundreds of people go through the course. We've had dozens of people join just this month. We've had nearly 100 people join in the month of April, actually. And like I said, everybody seems to be enjoying it. I'm not just saying that. I do mean that everyone I talk to who goes through the Cryptocurrency Technical Analysis Academy tells me that they're enjoying the course. They tell me that they thought it was worth every single penny. I can literally put all of these testimonials up on screen. I'm not going to protect their own identities because I haven't specifically asked them if I can use their testimonial. Nevertheless, when you go through the course, you're going to see people commenting on these videos, and you'll see what they have to say. Like I said, for their own personal privacy, I'm not going to do that. But either way, guys, one of the things I also want to mention is the idea of investing in cryptocurrencies and investing in markets. And guys, if you go in here and you look and you read this little biography that I have for myself here, if you read that, what you're going to see is that I talk about the power of investing in yourself. And that may seem cliche, so let me go ahead and explain it. It's very important for you guys to understand what you need to be investing in, because a lot of people, they say that and they're like, okay, well, are you investing in Bitcoin? Are you investing in Ethereum? I'm not talking about that. I'm not talking about, are you investing in cryptocurrencies or the stocks? I'm talking about, are you investing in yourself or are you investing in the market? Because those are two very different things. It's very important that you guys invest in yourself and then invest in the market, not the other way around. What I see so many people unfortunately doing is they jump into cryptocurrency, they start teaching themselves technical analysis, they start learning through fire, and they throw money at the market, and they learn through trial and error, and they spend hundreds, if not thousands, if not tens of thousands of dollars wasted because they didn't know what they were doing, instead of just doing something like this and coming to something like the Cryptocurrency Technical Analysis Academy, using the sale, spending $120, getting all of this information in a nice, neat package. Guys, everything that I learned to build this course took me hundreds, if not thousands of hours of research. You guys have a choice. You can join CT2A, come learn all these lessons. One lesson you learn here, you implement it, you're going to make the course price back so quickly if you're using even a decent sized amount of trading capital. But at the same time, you could also just say, no, I'm not going to join the course. I'm going to go learn all of this on my own. I'm going to go learn how to do technical analysis on my own, spend hundreds of hours doing it, probably waste hundreds, if not thousands of dollars, like I've unfortunately seen so many people do, because you're not experiencing the market just yet. If you are experiencing the market, there are a lot of high-level lessons in here that you may not be familiar with just yet. But anyway, guys, that's pretty much what I wanted to discuss. Like I also mentioned in yesterday's video, we do have a no questions asked 14-day guaranteed refund policy. If you want to buy the course, you will get all of that money back for free if you don't enjoy it. So guys, there's really nothing to lose. Go right ahead and jump on in the course. The link's in the description. Use that code Easter2019 and you'll get 20% off the course price. Anyway, guys, that's going to do it for today's video. I do want to thank each and every single one of you for watching as always, and I will see you guys in the next video. Peace.